Hello, this is the trade site U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, the 7th of April 2014, ending on Friday, the 11th. Hope you had a great trading week. I certainly did overall. Stocks and futures were nice. Forex was slow, but we definitely had a great trading week in stocks. I get asked a lot of times, can you just watch? What do you watch when you watch the indices? Do you watch the SPX index? Do you watch the spiders, which is sort of the ETF, the tradable stock of the S&P, or do you watch the S&P futures? For people who don't get a futures feed and you're doing intraday trading, you can watch the spiders or which is the SPY or the SPX index itself fairly equally. But the one that we always prefer, because the one that's technically the most correct because it has all the volume, is the futures. And I'm going to give you an example right here of why that's the case when we're looking at the market. So here's the SPX. This is the actual index, the S&P cash index. And as you can see, we've made new highs as recently as Wednesday, closing highs, and then kind of flat Thursday, sold off Friday. Okay. Here's the spiders. This is the tradable one. This is the stock ETF that you can trade. And by the way, these counts, I believe, if I got a projection mode, you can see we lose we were 5 bars into a new startup phase. That's gone. Watching maybe this static trend line, this red line here, but we did sell off Friday sharply. But as you can see, the spiders and the SPX look fairly similar. Now, let's take a look instead at the continuous futures contract. And the chart should look mostly the same with very minor differences. But minor differences can get you major differences when it comes to the seeker and the comer and their counts. And let's take a look at what this looks like. And here's what you get. Even though it's pretty much the same chart, we had a 13 seeker. Remember, the seeker is the one we like to use on the daily chart. We got a 13 seeker sell signal on Thursday, gapped up Friday, and sold off very sharply. So there's your signal on the correct version of the index, the true technical version of the index. This is what the big boys trade off of. And that's why I always tell people to use the futures when you can, okay? Because it's really, it makes a difference, and it gave you that signal, and we definitely saw it come into play here on Friday. Let's look at the Nasdaq-100 Index. Also sold off here on Friday. Obviously, the whole market did. We're watching that red static trend line as a first target, potentially. Let's look at some of the other minor indices. The SOX finally came in. It's been on a tear, ignoring everything else going on in the market. And look at that. The 13 sell signal on the SOX, as Rich pointed out this week, on Thursday. And it came in as well. So we've got two big sell signals on the S&P E-mini futures and the SOX. Biotechs have already been weak, and I've been saying it for a while. As go banks and biotechs, so goes the market. They tend to lead by about a month. And guess what? If you go back a month, the biotechs were near highs and just starting to roll over. So be aware of this as we're starting to see a picture paint here in the market. Let's look at some of the bigger stocks that we like to trade. Here's a look at Amazon. Had a nice winner today here in Amazon on the short side after the market gapped up. Here's a look at Apple. Apple couldn't quite get to 13, got to 12, and rolled over before it could get to 13. Just hasn't had enough up days to get that 13. Sorry, here's a look at the Google. This is the Class A, so this is the sort of the existing tradable Google now, GOOGL, and here's a look at that. You can see the breakdown point under 540 doesn't look pretty at all. Here's a look at Netflix. Yikes. Filling that gap. Had that as a winner today as well. I'll show you the Baidu. We made some money on Baidu today. We also made some money on Sohu. This one's just ugly. Ugly, ugly, ugly. Tesla. Not as bad. Look at that red static trend line. Just stop that thing. Holding up a little bit better, I think, than the others. Here's a look at Twitter. Isn't this funny? Coming back to, remember at the end, if you guys go back to January, right at the start of the year, I had mentioned what the bubble was all about, the late year run up. Nobody wanted to sell Twitter at the end of the year. There's, remember the stock came public at like 24, opened at 40, and you're in that last part of the year where once that stock started moving up in December, there were no sellers. First of all, a lot of the shares are restricted to begin with, and secondly, nobody wants to sell and lock in a tax gain at the very end of the year from some new stock that's going to give you a double and you have to pay taxes on it. So there literally were just no sellers in December, and everybody's saying, oh, why is Twitter being valued so high? It is not about valuations. People don't understand the stock market. It is about the fact that if you have interest and there's buyers and you do not have sellers, this is what happens. And yes, it put Twitter at a ridiculous valuation, but there just were no sellers. And then 2 days before the end of the year, they finally came in and somebody got short, I guarantee you, figuring that that was going to be about it. And look at the rollover. And what did I point out at the time? I had said, I think this thing comes all the way back. And here we are, almost all the way back. And in fact, the beginning of this 9-bar move in December, this 9-bar setup, the low of that is your static trend line. You watch this level when we get back there. And remember, we're already at this point in time on Twitter below the price that it opened at on its first trading day, which was up near 45. Okay. And I had mentioned the price that it came, I believe it came public at 24. Don't be surprised if we still come back and test that at some point in time. This whole bubble on Twitter was only a function of year-end lack of interest in selling for tax purposes. That is it. Twitter should have never gotten up. If Twitter had come public in April, this never would have happened, just to give you an idea. Very important to understand that because a lot of people don't. Facebook, down here again. So all the tech sold off, gave us a lot of great opportunities in the market. All right, let's take a look at what actually happened intra-week. Let's start actually with the ES. This is 10-minute bars on the S&P. This is only 4 of our days. Let's get this chart back to the point that it shows 5. There we go. So now you can see this with last Friday's close. What's amazing about the S&P here, okay, is that with all of this, we haven't even gotten back to last Friday's close yet. We gapped up Monday, dead flat, gapped up Tuesday and pushed higher initially, pretty much established the range for the day. Wednesday was a flat opening and a lot of back and forth early. Blue bar, white bar, blue bar. And they were wide bars too, but we just couldn't get going. Thursday, a little gap up, filled it after being flat for 40 minutes. Closed right where we opened. So, Wednesday and Thursday, net, not much. Tuesday, up, a lot of it because of a gap. The funny thing about this week is coming in to the week, we were at 1850 or so on the ES. And we were 35 points higher at one point in time. But, the first gap itself is 6 points, another gap. I mean, half of what we did, we gapped. So it wasn't even tradable. But it sure was tradable when they came down. They traded this whole price thing all the way back down. So here we are back to the lows. I'll mention the 13 buy signal right at the lows here on the 10-minute chart. All that really means is that was the end of the run on Friday. We flattened out from there as an exhaustion signal. But we have not filled the gaps. Nobody should assume that the downside is over. Just from a technical perspective, you're supposed to fill these gaps. 80% of them fill the same day. 95% of them fill within a week. So, by Monday we go back and fill this gap. All we've done is technically fill a gap that we should have filled in the first place. Let's look at the Nasdaq futures just so you see how the Nasdaq side handled it. A little more negative, right? Got the gap up Monday. Notice the Nasdaq side, I pointed this out in the market preview for Friday, going from Thursday night, how a lot of this week, the intraday action was actually negative. So even though we gained the first 4 days of the week, we're up from Sunday all the way to Thursday. Look at Monday, kind of a downside bias for most of the session. This is where our market directional tool is so helpful. Tuesday was definitely a positive day. Wednesday, mostly a downward bias. Thursday, mostly a downward bias. So here you are sitting up 60 points on the Nasdaq between Sunday's close and last Friday's close and Thursday's close. But it sure looks like more of this is selling than buying, which is really interesting. And then they come in Friday, gap up, and they just killed it. And we did very well on that move. But the Nasdaq side filled all its gaps, including the one from last Friday's close and Monday's open, and actually closed down for the week. So the S&P was actually up for the week, Nasdaq side weaker and down for the week. Gave us some really nice opportunities, though. No complaints at all about this week. I haven't added up how many of our trades triggered with market support and how many of those won, but it was a very high ratio, as usual. Here's a look at the data to come this week. We did have some big data this last week, but this coming week, consumer credit in the afternoon on Monday, no big deal. Tuesday, the JOLTS job openings, 30 minutes in, no big deal. Wednesday, MBA mortgage index, wholesale inventories, crude oil inventories, and the minutes from the last Fed meeting. Thursday, the weekly initial and continuing jobless claims data, along with import-export prices, and then natty gas and treasury budget at 2 p.m. Eastern time. Friday, PPI and the Michigan sentiment. That's the first look. So none of the bigger data coming out this week. and we don't start earnings yet. We'll really get into the heart of earnings the week after this one. That's going to be an interesting week for a couple of reasons. The week after this one, just to set you up after this coming week, so the week that goes from the 14th to the 18th of April, a couple of things. That is options expiration week. It is the start of earnings, the core 8 days of earnings starting on that Tuesday, which creates sort of a different market environment. The market is closed on Friday, April 18th for Good Friday. So options expiration is actually going to occur on Thursday. That will probably have an impact on when the options unraveling occurs. Meanwhile, you've got earnings on that Tuesday, Wednesday, and Thursday. Okay, there's a lot of stuff coming out that week, so we need to be aware of that. That should be a very interesting week. This week here coming up, not as much to point my finger to, except for the fact that the market, with that 13 sell signal that we got and selling off on Friday, if this is the beginning of the downward move, I would expect a few days to actually be on the downside pretty sharply. That is it. We will be calling it as usual in the Trade Site Trading Lab for stocks, futures, and Forex. We hope to see you there, help you make some money in the markets. Hope you have a great trading week and a great weekend.